Zach Pakoff here, and welcome back to another lesson video. Today, I will be going over the 18-1 text. So let's jump right into the video. Okay, so as I had stated before, I'm going to be going over the 18-1 text. So we're starting our new chapter today, and in this chapter, we will be learning about how to account for plant assets and depreciation. In addition to that, we will also be learning about how to define accounting terms related to plant assets, depreciation, and property tax expense, identify accounting concepts and practices related to accounting for plant assets, depreciation, and property tax expense, record the buying of a plant asset and the paying of property tax, calculate depreciation expense and book value using the straight line method of depreciation, prepare plant asset records and journalize annual depreciation expense, record entries related to disposing of plant assets, and finally, calculate depreciation expense using the double declining balance method of depreciation. All right, so now that I've read over the learning objectives, let's jump right into the 18-1 text. Alrighty, so now we're going to be moving on to the 18-1 text, which is the first lesson in Chapter 18. And in this lesson, we will be learning about buying plant assets and paying property tax. Okay, so there are a few key terms that I'd like to go over before we start the accounting part of this lesson. So real property is land and anything attached to the land. Personal property is all property not classified as real property. And an assessed value is the value of an asset determined by tax authorities for the purpose of calculating taxes. All right, next we're going to be talking about recording the buying of a plant asset. So this transaction reads, on January 3rd of 20X1, paid cash for a display case, $3,250, check number 4. Okay, so when we record the buying of a plant asset, there are multiple steps that we have to follow in order to complete this process. First, we write the date, which is January 3rd, in the date column. Next, we write the account title, which is store equipment, in the account title column. After that, we write the check number, which is 4, in the check number column. Following that, we record the amount, which is $3,250, in the general debit column. Then, we record that same amount as a credit to cash in the cash credit column. After that, we post the general debit column to the general ledger. And finally, we return back to the cash payments journal and write the account number, which is 1215, in the post reference column. And one last thing to note here is that store equipment is a plant asset account that has a normal debit balance. So it increases by a debit and decreases by a credit. Okay, so the last thing that we're going to be talking about in this lesson is calculating and paying property tax. So this transaction reads, on February 1st, Classic Parts Incorporated paid cash for property tax, $720, check number 69. All right. So when we calculate and pay property tax, there are multiple steps that we have to follow in order to complete this process. First, we write the date, which is February 1st, in the date column. Next, we write the account title, which is property tax expense, in the account title column. After that, we write the check number, which is 69, in the check number column. And then, in order to calculate the annual property tax, we take the assessed value, which is $60,000, and we multiply it times the tax rate, which is 1.2%, and that will give us the annual property tax amount, which is $720. And we record this amount in the general debit column, and then we record the same amount again as a credit to cash in the cash credit column. All right, so that is the end of the 18-1 text. In the next video, I will be going over the 18-1 work together. Okay, thank you.